What's going on, guys? I hope all is well. I wanted to share 3 investing mistakes that beginners make when investing in the stock market. So that first mistake is understanding that the stock market is volatile. And with the stock market being volatile, that essentially means that the stock market is constantly moving. It's constantly, going up, going down, and things happen in the stock market because there's a common misconception that the stock market is stable, or some people think that the stock market just goes up essentially, but that's not true. When you are invested in the stock market is a volatile market, because you have millions of people investing. You have retail investors investing, which is people like us, individuals who invest in the stock market. You also have hedge funds, those big investment companies who invest in who have a lot of money, and they're able to move markets with buying and selling. So you have to know that when you are investing in the stock market, there's going to be volatility. It's going to be, days where it could be like a news event that happens, and it can cause the stock market to, go up rapidly, or it can go in the opposite. It can cause the stock market to go down rapidly. You remember when we had COVID, and you remember when that news came out, the stock market just plunged. It was going down day by day because, there was a lot of uncertainty going on in the world, and that can cause the stock market to go up. It can cause it to go down. So it's very important to know that that the stock market is volatile, and to make sure that you have patience. Make sure that you know that, and make sure that you have a sound mind to know that when you are investing, it's a chance that the market goes down and your portfolio might go down, but it doesn't mean that you have lost your money. It just means that your portfolio is down, and you have to stay level-headed. You have to know that the stock market on average, it bounces back. So stay level-headed and know that when you are in the market, that there will be volatility. The second thing that people must know, and you have to avoid this mistake in investing in the stock market, you have to know what you are investing in. You can't just buy anything or buy any company just because you see that company is a big company, or you may see that this company is a popular company. You have to understand what you are investing in. So it's very important to sit down. You can go on, for example, let's say Microsoft. You can go on their website and you'll be able to sign in, and on their website they have an investor relations page to where you can be able to learn about the company, know about the company, see what's going on. You can go on different third-party websites as well to read about those companies, and to be able to understand what's the pros of the company, what's the cons of the company, and also be able to see the financials of the company. But it's very important to know what you are investing in, and not go by hearsay or go on go on different platforms or shows and see that, hey, this person's buying this, because just because they're buying it doesn't mean that it's for you. It doesn't mean that it's a good company for you. It just means that they are buying it. So it's very important to do your own research and be diligent in understanding what you are investing in, so you can be confident and know what to expect going forward. And the third final mistake that people make, new investors make, and people make in general, is buying companies at all-time highs. It's very important to try to find a good deal, and try to put yourself in position to be a value investor. And that's what Warren Buffett is. He's a value investor. And what he does is he's able to buy companies at discount. And you can buy a company at an all-time high, and obviously it can keep going up, especially a good company. But you want to put yourself in position of buying things on sale. You know, like you go to the grocery store, retail store, you want to buy stuff on sale. You don't want to just buy something that's at an all-time high. You want to put yourself in a position to make a great business decision. And that's what you do when you buy things on sale. So it's very important when you are buying a stock to know that, hey, this company, is at an all-time high. But I know that it could be an opportunity to where, it dips, where it cools off some, to where I can take advantage of it, and it drops 10%. That may be a time to buy. It drops 15%. That could be a time to buy. It drops 20%. That could be a time to buy. So make sure that you're looking at the company and knowing where the stock is at price, and see, can you position yourself to buy that stock at a discount, so when it does bounce back, you'll put yourself in a great position to have profit. So know where the stock is, and take advantage of those market dips, those market crashes, and don't just go with the trend, but know where the stock is, and be a smart investor. Buy things on discount. So I just want to share those 3 common mistakes that people make, especially with brand new investors. And let me know in the comments what you guys think. Let me know what things are you struggling with, and let me know what things are going well with you as well. So I just want to share this so we can all get stronger. Hit that like button, subscribe to the channel, and share this video with someone who needs to hear this message. I appreciate you guys. I'll talk to you guys soon. Peace.